stock at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a strong start following a rally on Wall Street. Investors are hopeful of a possible thaw in trade tensions between the US and China. The Lok Sabha has approved a constitutional amendment paving the way for reservations of up to 10% in government jobs and educational institutions for economically backward classes from the general category. The RBI refuses to grant any special dispensation for lenders having exposure to the IL&FS group. All defaults have to be classified as NPA after 90 days of being overdue. Infosys will be considering a share buyback and a special dividend at its board meeting, apart from its results, of course, on Friday. And IndusInd Bank will be the first Nifty company to report its third quarter earnings today. Provisions for IL&FS exposure is likely to weigh on the lender's profitability. Let's talk about the US markets now. US stocks rallied on Tuesday as the possibility of progress in trade talks that are ongoing with China overwhelmed skepticism about the financial sector. While the dollar gained, treasuries slumped and crude surged towards $50 a barrel on expectations that the market will be tightened by OPEC's oil output cuts. Abigail Doolittle of Bloomberg News brings you all the details in this report.
Stocks rallied in Tuesday's Wall Street session. The Dow, the S&P 500, and the Nasdaq were all up about 1% or a little more. This came on some intraday volatility that was brought about both by the chip sector and the financials. The chip sector, or the stocks at one point down 1.8%. This on negative results from Samsung, plus a bearish call on the chip sector for 2019 coming from Goldman Sachs. While the financials, there was also some weakness there at the lows, down more than 1%. Only to climb slightly higher at the end of the day. At the end of the day, again, the major averages up about 1%. That was off of the highs. So, again, a return of the intraday volatility that we've seen. Doing well all day, though. The FANG trade, Facebook, Amazon, Netflix, and Alphabet, those stocks as a whole up about 1.8% on the day. We also saw strength from the iPhone maker Apple, up 1.9%. And energy was a strong point, too, throughout the day, rallying in sympathy with crude oil, up for a seventh day in a row, gaining about 11% over those 7 days, the longest such winning streak going back to July of 2017. So despite that intraday volatility, overall, Tuesday was a risk-on day with stocks climbing by about 1% overall, while Haven bonds and the Japanese yen did pull back. Reporting from New York, I'm Bloomberg News' Abigail Doolittle.
All right. Now, apparently, U.S. President Donald Trump may be eager to strike a deal with China soon in an effort to perk up financial markets that have slumped on concerns over the trade war. Sean Donnan of Bloomberg News has filed this report.
One of the things we're hearing is that increasingly in the White House, President Trump is minded to try and strike some kind of deal to find a way out of this. What that way is, we still don't know. Whether that is a comprehensive deal, we still don't know. But we're working towards this March 1st deadline. The negotiators, the kind of working level talks that have been going on in Beijing since Monday were extended into a third day today on Wednesday there. And we'll see where we go from there. The expectation, what we were hearing certainly after these things wrapped up on Tuesday, was that they were making progress, that there were probably going to be further talks, maybe at a more senior level in the weeks to come. So things have been shaping up well there. But really in the White House, you know, a lot is going to depend on where President Trump is. And what we're hearing increasingly is that he wants to strike a deal and he wants to do it soon. He wants to calm the markets.
All right, and well, it seems to be working in that sense. There's no clarity as to what exactly is the reason for the extension of the talks to a third day today. But let's have a look at the Asian markets that have opened so far. I'm joined now by Rosalind Chin from the Bloomberg studios in Hong Kong. Good morning, Rosalind. All in positive today, at least at the start of trade. What are you picking up?
That's right. Well, if optimism is the name of the game, if that's what President Trump or the U.S. is trying to achieve by sort of moving closer towards some kind of progress in these trade talks, well, it seems to be having some effect, at least today, on the market. So we see that the MSCI Asia Pacific Index is gaining more than 1%. Most of the major indices in the positive territory so far at this point in the session. So we do see some optimism, and that is really the key word, isn't it, that investors are looking for. Now, around the region, let's take a look. So we have the Nikkei, that is up by more than 1%. The Topics gaining by nearly 1.2%. The yen, not a lot of movement there. It's kind of stayed in its range for the last few days at 108.73 to the US dollar at this point in time. We saw that when the news came out about Trump perhaps pursuing a trade deal, keen for a trade deal because of the markets, we did see the Aussie dollar get a bit of a lift. Currently it's at 76 cents, or nearly, sorry, 72 cents nearly. To the Aussie dollar. There's a lot being put into these talks, but some of the guests that we've had on Bloomberg are saying it's really about the long game. So we had Kate Moore from BlackRock basically saying that US-China trade relations, there will be an adjustment for many years to come. It's not just about this 90-day period that we've got these talks ongoing now, but really we're looking into the far future in terms of how these trade relations will be progressing over the years. Other risk factors, of course, looking beyond the immediate sort of 1, 2, 3 days of US trade talks, US-China trade talks that we've had, include, of course, the US shutdown. And we know that Trump is going to be making an address very soon. And, of course, Brexit, of course, that vote will be happening next week as well. All these factors, of course, could be affecting the markets beyond what happens this week. And, of course, in the longer term, we're looking at institutions like the World Bank cutting the global economic forecast for 2019. It sees it at 2.9% growth compared to 3% in 2018. It says that, there's a slowing growth in trade and investment and rising interest rates hitting momentum, especially in emerging markets. The downside risks to the world economy have become more acute, according to the World Bank. So right now, some positivity, let's grab hold of it, and maybe we can, some of the investors will maybe be able to make it last as long as possible, because there are a lot of challenges coming up in 2019. Back to you.
Absolutely. Truer words haven't been spoken. Thanks so much for that, Rosalind. Agam Vakil is here to tell you all about the day's trade and whether or not that positivity that you're seeing across the board in the US and in Asia is going to extend to trade here in India as well. He's also going to tell you about the futures and options space. Agam, what do you think?
Well, why shouldn't it? We're seeing the SGX Nifty reflect that. We're seeing that 0.7% gain on the SGX Nifty, and it's moved back above the mark of 10,900, just about 100 points shy of the 11,000 mark. That's the all-important level everyone's keeping an eye on. But moving on to the Nifty, again, well, it was a very range-bound day of trade, very quiet day of trade, and very little to speak for when it comes to the broader market indices. But the Nifty Banking Index and the Nifty PSU Banking Index specifically advancing by around 2.8%. Now, coming down to your ADRs, that's American Depository Receipts, there was some more strength coming in. And do remember, we were also getting a lot of positive cues when it comes to ICICI Bank on a fundamental basis as well as on a technical basis. And we're seeing for more strength coming through there as well. Of course, all ADRs close in the green. We're going to watch out for something like an Infosys, of course, which has also announced a buyback. It is going to consider buyback on the 11th when it considers the earnings. Now, when it comes to FIs and DIIs, the numbers are starting to increase. So FIs see a net sell of around 555 crores, 700 crores buying worth coming in on DIIs from net basis. In terms of contributors, ICICI Bank, as I was suggesting, stands out. In fact, these are three banks, top three gainers and contributors as far as the Nifty goes. Let's talk about your futures and options space. No change at all in the open interest in the Nifty futures and the Nifty banking futures. We're seeing a lot more accumulation. So if we can have that plate up as well, 29% added in OI towards fresh longs as the index advances. But let's take a look at your open interest distribution. Have things changed? No, not really. 500-point range at this point in time between 10,500 and the 11,000 world call. Should we see the Nifty move above the mark of 10,900. Today, we could see that upper movement of that option. But 10,700 sees more writing, that's the put, and 11,000 call sees unwinding considering the Nifty advance. Let's talk about your other variables, such as the Rani Power and Jet Airways that remain the F&O ban. And we are also tracking the India VIX, which came off by as much as nearly 4%. Now back below the mark of 16, your Nifty put call ratio edging higher to around 1.4. Nifty banking put call ratio at around 1.3 as well, which is also increased. And moving on to your stocks, we are keeping an eye on something like a Kaveri Seed Company, which lost out, and ICICI Bank, which has advanced. So some contradicting moves coming there. Unwinding coming along in ICICI Prudential and Bharti Infratel. Bharti Infratel continues to see short covering as it moves, as it continues to advance. So two stocks are there we're watching out for, Alex. On the whole, we're likely to see a good day of trade, at least as far as the opening is concerned.
Absolutely. Thanks so much for that, Agam. Well, let's shift focus now to commodities. Yash Upadhyay is here to tell you all about what's happening there. Yash, I'm guessing you're going to start with crude.
That's right, Alex. Good morning to you. So crude oil prices, they climbed another 1% on Tuesday to close at a 3-week high as U.S. negotiators touted progress in trade talks with China and investors gaining faith that the OPEC will shrink its output. Prices advanced almost 12% in the last 7 days, fueled by growing confidence that the OPEC and its allies will restrain production enough to avoid an oversupply situation. Muted cues coming in from the base metal space. Copper prices, they fell 0.3%. Over concerns of a slowdown in the Chinese economy resurfaced amid initial signs of an increased supply of the metal. Aluminum prices, they snapped their 3-day winning streak to fall by about 0.75%, whereas tin, lead and nickel all advanced in trade anywhere between 0.5% to 1% each. On the other hand, gold prices saw some weakness coming in, ending the day by 0.3% lower, suffering its second loss of 2019 as U.S. equities rose, tracking the strength in the U.S. dollar as well, following the weakness in demand.
Thanks so much for that, Yash. Well, today is going to be, as we told you at the start of this program, the first day of big results. IndusInd Bank will be the first Nifty company to report its December quarter earnings today. It's likely to be a mixed quarter for the private sector lender. Net interest income is seen 25% higher compared to last year at 2,360 crore rupees. Net profit, however, is seen 2% lower compared to the last year at 918 crore rupees. Now, the decline in profitability is likely due to elevated provisioning from the bank on account of the bank's exposure to the beleaguered IL&FS group. Among other factors to watch, though, net interest margins are likely to remain flat sequentially. Asset quality may see a deterioration owing to elevated provisions. Details on the merger with Bharat Financial will be another key factor to watch out for. All right, now let's have a look at what's making headlines across the globe. Jessica Summers of Bloomberg News brings us all the first word headlines.
The World Bank has cut its view of the global economy. That says slowing growth in trade and investment and rising interest rates sap momentum. The semi-annual review says downside risks are more acute, including what it calls, quote, disorderly market movements, as well as the escalating trade dispute. It sees global growth of 2.9% this year. That's down 1/10 from last year and from its forecast in June.
I think things are getting worse relative to last year. The title of the report is Darkening Skies. We see the skies are darkening over the global economy. Global growth is slowing. Risks are rising.
U.S. consumer debt rose in November faster than expected. That's as Americans continue to borrow to finance purchases. Fed data showed total credit rose just over $22 billion from a month earlier, while non-revolving debt rose the most in a year. That follows a downwardly revised $25 billion credit gain in October. The figures also suggest consumers were more cautious heading into the holiday season. And UK lawmakers will vote on Theresa May's Brexit deal on January 15th, when the Commons will decide whether to accept the accord reached last year with the European Union. And lawmakers have defeated the Prime Minister by approving financial measures to make a no-deal Brexit more difficult. Pro-EU Conservatives voted with the opposition to block government spending on preparations for a hard split. London's Heathrow Airport has reopened now after being shut down for more than an hour after a reported drone sighting. Departures were halted soon after 5 p.m. UK time, but operations resumed following a police evaluation. The location of the reported drone meant that incoming flights were not affected. The incident comes after suspected drone raids on Gatwick Airport before Christmas. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
The Reserve Bank of India on Tuesday has officially rejected a request placed by bankers with respect to the IL&FS loan classification. Remember that in December, the bankers had written to the Reserve Bank of India's Governor Shaktikanta Das requesting that IL&FS loans continue as standard assets on bank books, at least for the foreseeable future, because there has been a moratorium that has been placed by the NCLT on the assets owned by IL&FS. According to the bankers, because of this moratorium, they cannot initiate any kind of recovery action. Of course, the Reserve Bank of India has said no, and any assets that are due for more, that have been in default for more than 90 days will be classified as non-performing assets by the banks, which is likely to happen in the December 31st quarter. Banks currently have an exposure of about 60,000 crore against IL&FS, and any kind of default in this will lead to higher provisioning as well as an uptick in the NPA ratios. Remember that IL&FS started defaulting on some of its loan repayments as well as bond repayments as early as September 2018 and has been continuously defaulting on that. In fact, in October, the government had to step in and had to replace the IL&FS board with a government-appointed board that is being led by veteran banker Quota. As far as some of the other requests that banks had made, the RBI has been mum on that, especially on the request made for easing the February 12th circular, where the RBI requires banks to address defaults on the first day of default rather than wait for 90 days for it to become an NPA. According to the bankers, they should be given a 60-day leeway so that they can sort of coordinate and come up with a better plan to deal with these stressed accounts. Of course, the RBI did not respond to that. They also did not respond to anything regarding easing of guidelines with respect to ATMs as well as risk weightages on corporate and retail loans. All these things are still pending. We will know on the 17th of January when the RBI meets representatives from the banking sector as well as the Indian Banks Association what it actually thinks about some of these requests.
These are the key highlights of what the bill proposes. It wants to add an additional clause in Article 15 and 16 of the Constitution. One deals with reservation in jobs and the other deals with reservation in education. The new Clause 6 of Article 15 seeks to add a provision for reservation of up to 10% for economically weaker sections in educational institutions, including private institutions, whether they are aided or unaided. The only exception to this is minority institutions. Remember, here individual state governments can decide how much is the extent of reservation because it is up to 10%. Could be lower, but definitely not higher. The next key addition is Clause 6 to Article 16, which deals with reservation in government jobs. Here, the new Clause 6 seeks to add provision for reservation of government jobs up to 10%, again for economically weaker sections. This, of course, is over and above the existing reservation quota of 50%. And here is the most important part of the bill. How do you decide which is an economic weaker section? What is the criteria? Well, here the bill says economically weaker sections shall be such as may be notified by the state from time to time on the basis of family income and other indicators of economic disadvantage. It's a broad enough definition, so states and centers can decide on their own what the criteria is. It's also vague enough to suit any purpose. It could be family income or any other indicator of economic disadvantage. So to recap, number one, caste does not feature in the bill. So these are the important highlights. So any community can be given reservation on economic parameters, excluding those that are already reserved. Secondly, There is no criteria for economically weaker sections defined. It's broad enough to leave it to individual states. Perhaps one of the reasons why even opposition parties cannot find the words to say they do not support this bill. Number 3, which is another important one, reservation in private educational institutions has also been included, and this is aided and unaided institutions for the additional 10%. And of course, this additional reservation of up to 10% will not impact existing reservations. This is the bill as of now. Of course, it has to cross a number of hurdles, including parliamentary ones and those in court.
Well, a bunch of news that we're tracking this morning. I'm going to start off with Tata Steel Q3 updates, where the sales volume on a standalone basis look a little soft. The number has come down by as much as 9%. European sales too have declined by 6%, and Southeast Asian sales volume, that too has seen a downtick by as much as 6.5%. Separately, BSL, the sales have come down by as much as 8% year-on-year basis. The company also said that right now it's going to be in talks with South Asian, with regards to the Southeast Asian assets under Natal to China's He Steel. So that's one development that we like to keep an eye out on. Apart from that, NMDC, where the board has approved a share buyback of an equity to an extent of 3% at a price of around 98 per share, which implies a premium of roughly around 2 to 3% from the previous market price, and the buyback aggregates to around 1,000 odd crore. Infosys, where the board, in an announcement yesterday, the company has reported that the board would be meeting up on Jan 11 to consider the share buyback and special dividend. Infosys, in the start of the year, that is the FY19, had announced the payout of around $2 billion. Separately, we'd also be looking at Yes Bank, where the board would be meeting in to select new MD and CEO. Separately, we're also tracking in Jet Airways, where the bank has proposed a $900 million turnaround plan for the company. With this turnaround plan, if approved in the current state, Naresh Goyal's stake will fall way below 51%. And also we're looking at a bunch of print media stocks like DP Corp, Jagran Prakashan, HT Media, after INB Ministry has hiked the advertisement rate for print media by as much as 25% for the period of next 3 years.
All right, there's clearly lots to talk about over the course of the day. You'll find all the live market action right here on Bloomberg Quint Live, but there are also several stories on the website that you should consider reading. That's bloombergquint.com. First up, the Reserve Bank of India has constituted a high-level committee under Nandan Nilekani to suggest measures to strengthen the safety and security of digital payments in the country. The 5-member panel on deepening of digital payments has been constituted to encourage digitization of payments and enhance financial inclusion through digitization, according to an RBI statement. And the government has announced a 25% hike in the rates it pays for print media, for carrying its advertisements ahead of the crucial general elections this year. The decision has been taken after taking into account factors like price of newsprint, processing charges, and others that go into the calculation of advertisement rates. Now, we'd love to hear from you what you think about this program or about the topics that were covered in it. Do let us know in the comment section below. Also, if you like the program, don't hesitate to hit the like button and also to share. Up next is a lot more, so do stay tuned. This is Bloomberg Quint.